highest level in decades.
You are going to see a crack in the bond market.
The lower income consumer is navigating some financial distress.
Gonna be broke. I'm telling you it's gonna happen, and you're gonna panic.
And cue the fire. We are either going straight into a gnarly recession or a full-blown depression. And like always, it starts in the bond market, not the stock market. And then the stock market sells off. The bond market has already predicted this. So if you're watching this today or the last few weeks and you're like, why red? Why Walmart red? Walmart's a staple. Yes. Or a quasi-barometer of how the economy is doing. Bad. To summarize Walmart, everyone is drowning. If you want to know why the bond market, what's wrong? Two things. Why do yields go up? Two, inflation expectation. And how does the economy look in the future? Not good. What I am about to show you is really, really bad. This is now, this is later, but bravo! The straight of your hair mousse. It's good. I'll tell you, nothing is good. I mean, I've had birds fly in, never fly out. Nothing enters this, nothing exits this. Same goes for over here. Now, people will be like, no, we won the war. Ships are moving. No, they're not. We won this war about as much as we won Vietnam. You could believe whatever propaganda you want, but let me just ask you a very common sense question for a friend. Let me ask you this. If you were to sail through the Strait of Hormuz and you're in a cruise ship, you and your friends celebrating your 50th, and you find out that 30 out of the 33 Iranian missile positions remain active. That means they can blow you up. I don't care that DJT wiped out their Navy. They're taking you out. So if you see any other solution besides dropping a nuke, going in with boots on the ground, or DJT basically tucking his tail in between his legs and being like, I screwed the pooch. I was coming off a high from Venezuela. I know he doesn't talk like that. And just decided, hey, why don't we just take Iran? Breaking news. Let's set that aside for just a moment. I want to share with you the big picture, the gigantic poop sandwich that we are currently feasting on. That sandwich has doubled in price just in the last 6 months. Here is the big picture. Let me break it down very simply for you. We have 40 trillion in debt. What is that? Bonds. Or let's put it on the credit card. Here, just pretend this is you. You spend, or your wife spends, I know, Bob, you're having a tough time reining her in. But Bob, you're the one who bought the Harley. I'm just saying, and the motorhome. You buy the big things. She buys the little things. 7.2 trillion this year. That is a lot of money being spent. So remember, 7.2 trillion. Now let's come over here and look at what we take in. 5 trillion. So what you're saying is we don't make enough money, or we're spending too much by a year. 2 trillion. That makes sense, right? We make $10, we spend 15. I have a solution, Bravo. Let's just stop spending so much. Well, that's a great idea, Scott. Here's the problem. When you stop this, you go into what's called a gnarly recession. Then you don't take in so much, right? See? It's like a snake eating its tail. And here, over $1 trillion just on interest. Not cutting that, actually, that's going up. Because everyone and their mother is around the world are dumping our debt, causing the interest rate to go up, like on your credit card. Let's say you're paying 20%, and it's like, oh, it's 50% now. Houston, we have a problem. Coming over here, are you going to cut that? Defense? If you cut that, GDP goes down. Also, something tells me, DJT wants to pump that to 1.45 trillion. So I'm going to say with this administration, you're not going to cut that. You want to cut Social Security? You want to see pitchforks? You want to see fire? You also want to see a recession? The second you hand any of this money, Medicare, Medicaid, Social Security, into people's pockets, into their hands, they spend it. Let's think back a couple years ago, and I said this is going to pump GDP. This will cause, oh, everything's great. It's not great. Give everyone a stimulus. Boom, market on fire. Well, not anymore. So do you guys want to listen in on how great people are doing? There are people with doctorates, masters, bachelors.
I'm hoping like at least $40.
How much?
In the single digits, guys. I have $7.46.
Oh boy. It's 2 days before payday. How much money do you think you have in your bank account?
I think I have like 17. 31. Hey.
Okay, it's 2 days before payday. How much do you think is in your bank account?
$63. Oh, $1.13.
I see so many of these and they have rings on their finger. You're married. You have $1 left. A PhD. You're a school psychologist. All of this is going to get worse. And you know it's bad when you have like top watch show is affordability in America.
Launching a new series, Affordability in America. Stories about prices from groceries to gas, why they're rising, and what people are doing about it. And we start with CBS's Christiane Benavides talking to a mom of 3 about how she's been able to stretch her family's budget.
Here's something crazy to think about. Prices are not really going up. And I know what you're thinking. Look, tomatoes up 40%, ground beef. You wish 14%. Like year over year, 200%. But these 4 quarters are still retaining purchasing power. $1 right here, $1. Cost me $75 to buy $1. Back in 1964, that's when this was minted. $1 could get you lots of stuff. The same stuff now. If you just use the correct measurement. See, that's silver. That's an asset. It looks like, oh my gosh, it's gone up so much. It really hasn't. Same thing. If you had a farm and you barter with your neighbor, you're like, okay, so I have a bushel of tomatoes and I'll swap you for a pound of ground beef because you have all this cattle. They're like, okay, do that for your entire life. And it's like, that's just what, it's all equal. But the minute you start doing this stuff, whether it is this or it is bonds, and that is what's causing this inflation. It's the Treasury issuing bonds, and people make a shat ton of money, especially in the banking system. With loans, which are currently happening, and that's what money is in a debt-based system. It's debt. And in a debt-based system, we are currently expanding the monetary system, the beast, the bond market get bigger. The loans get larger. And if you don't own assets, you get wiped out. I don't care what you buy wood. Listen to this guy talk about wood.
Goodness gracious, man. Have you all seen the price of lumber here lately? I'm in Lowe's trying to get some stuff for a little project. $46 for one sheet of plywood, 4x8, half inches thick. It is treated, but $46 right now. Mind-blowing. I used to flip a lot of houses and do a lot of remodeling back around 2019, 2020, right before COVID. And then I was getting these things for around $12 a sheet is what I was getting it for in my area.
We go from $12 a sheet to almost $50. And your government will be like, yeah, it was about 3%. Guys, the genie is out of the bottle. You cannot solve this nor fix this. I don't care what the government says or where you are at on this chart. You can borrow more. Well, that's not going to solve anything. We've seen that doesn't work. It actually works in the beginning, and then it no longer works after about 80% to GDP, which we are currently at 122 and rising. To put it simply, the game is currently over. You can do cut spending, right? But then you have less taxes, and then that hurts the economy. You know, the government will be like, well, you know what we're going to do? We're just going to fire the Fed, which you can't, and then we're just going to lower interest rates just like that. It's like, do they really think everyone is that stupid? Yes. Are they that stupid? I'm going to agree with that one also. This is while everyone is dumping U.S. treasuries, like the house is on fire. Also, 3 years ago, do you guys remember Rick talking about interest rates, which were negative? And he was saying, yeah, they'll probably top out around, and I remember this. And I'm like, come on, 13 to 15%. And when he drew this little line, like, yeah, I see 5%, definitely 10-year. I was like, that's impossible. Actually, let's listen in real quick.
I personally always find anniversary dates very key. And I can't help thinking about September of 81 when we had the all-time high closing yield just shy of 16%. So what I'm talking about here might be dancing between the raindrops. You never want to go against a market that is burning to the upside. But you might want to give it a pause if it looks like it's going to back away a bit. But in the grand scheme of things, I think rates are going higher. So let's go to the charts. Like I said, not my best work, but high-low perpendicular midpoint. We always pay attention to those, especially when one of those points is the all-time low closing yield at 0.5%. So you take the high, you take the low, you connect it, you find that midpoint, you draw a perpendicular line. And what you find is it just keeps you on the straight and narrow. Those are very key. The more important the spike levels are, whether it's a key high or key bottom, those make it work that much better. Now, this chart is really off scale. Remember, when you're doing these charts, you got to use logarithmic paper. This is just a rough gauge, but there's your near 16%, SEP in 81 for your anniversary date. And the whole point of this chart is that we have a
16%. We have a really good percentage chance. If you thought 1 trillion was bad, what about 4 trillion? At a time, I don't see it getting better. I think the Treasury's still going to print. I think the government is still going to spend. I think they will continue to go to war. And I don't know, is it a distraction? Which I'm going to go with, okay, right now it's a pretty big distraction. Oh, by the way, there is currently no flights in there. No, there is no air. I know, that one right there. That's about it. Other than that, the last time we saw something like that, there was a lot of bombs dropped. While we are currently playing, look over there, don't look over here. Look at the bond market. Bond yields are in the danger zone. Here's what that's not hurting the stock. Oh, here's why that's not hurting the stock market. Yeah. Yet. Wow, if you were trading this today, what a reversal. Congratulations. We must have ended the war. Also, if you're like, bravo, we're not going to 5%. Well, do you know how to read this? I help you with 2 lines. 1, are you above the 200? Yes, that is momentum up. Number 2, do you want to know why it pulled back right there? That's because it went purple and it went into the bravo zone, and it always pulls back. See what happened the last time it went into the zone? It pulled back, but then it went higher. It would be right over here. Now you know why it pulled back right here. But wait, the 2 lines. We're going to go with line number 1 and line number 2. This is also what's called a continuation pattern. Which way? Up. Now, if you would like, because that is a flag pull, that is the pennant, you measure that all the way up. It would look something like this. That's 8.5. For me, that's like measuring from the taint and telling your girlfriend it's 2 feet. I would actually like to be a little bit more conservative here and say you have broken that, you have retested that. If you go higher, we go up to 5.5. Here we go, what the world is all waiting for. Does the world continue to dump bonds, causing rates to go up? Does our economy continue to weaken, causing rates to go up? Does the government continue to spend, causing rates to go up? This causing this to go up. And again, the government cannot do anything. U.S. 30-year yields hits highest since 2007. Is the bond market about to break Washington? And they won't know what to do except, you gotta cut rates. People are dying. I say, fasten your seatbelts, Dorothy. Kansas is going bye-bye. How can I benefit from this? I teach you step by step. I've been getting a lot of comments. Where do I start? Start right here. Stock market money glitch. But how do I know I can trust? I have over 50,000 students. I have a refund rate close to 0. I mean, you'd kind of feel like a shady scumbag if you're making $7,790 a week, clicking on the screen and going like, I don't know, I was expecting a little bit more. I mean, I know you just sweetened the deal with $900, Link. Those are for those of you that are like, I want to try this out. And I appreciate you doing the $100,000 thing because we asked for it. All you have to do is click. When it goes 789, click. It swings up. Click the button. You guys are absolutely going to love the glitch in crypto. It's insane. Actually better than being the president of the United States and having insider trading information and trading stocks. He would never do that. I'm just glad that they all passed a law that no more. Right, Nancy? Breaking news, this price goes up. It's $2.99. I'm filming. This is my introductory offer. And I think I have about 15 videos left and $3.99. Why not get it now? get into the game, get into competition, like change your life. And with that, I love you. I will see you tomorrow.